Hi friends and traders, welcome to Trending Sutra. My name is Amit and this is our daily market snapshot podcast. So again, the volatility continue in the market. Despite of that, the closing remain flat and there's a very special proverb in Hindi ke लौट के बुद्धू घर को आए. Market open with a gap down, extend the fall, but exactly reverses from around 18,350 in the spot, as we have mentioned this level earlier also in our weekly update, and reverse approximately 200 points, 180 points from the day's low, but ultimately closed flat. So Nifty closed flat in the spot with the around 22 points gain in the future, whereas Bank Nifty closed with 75 points gain in the spot and around 90 points gain in the future, approximately 0.17 to 0.22% gain on the positive side in the Bank Nifty. Whereas if we talk about USD INR in the spot, dollar rupee close up 30.31%, approximately 26 paisa higher. That means dollar is higher than rupee by 26 paisa, whereas in the future it closes higher by 23 paisa, approximately 0.28% in the net terms. If we talk about Nifty, 28 stocks close in positive, whereas 22 stocks close in negative. In the Bank Nifty, 9 stocks close in positive, whereas 3 stocks close in negative. All the major stocks like HDFC Bank, Axis Bank, they remain, ICICI Bank, they remain on the positive side, whereas in the Nifty, IT remain the biggest dragger. SDFC Twins and approximately SBI, SDFC Twin Reliance just manage the index on the positive side, whereas IT and SBI remain the draggers. Stocks like Adani, ANT, Reliance, SCL Tech, these stocks somehow manage with their closing at the gains, whereas all the tech stocks fall. If we talk about FII data, FII today sold minimally minus 138 crore, whereas the DII remained buyer with 695 crore. So approximately around 530 crore buying comes in the market. So, whereas in the derivative segment, FII remain buyer with 657 crore in the index future. In the option, they bought approximately 4,800 crore, whereas in the stock future, marginally they sold around 310 crore with 182 crore of buying in the stock options. If we see participation wise position, client remain positive, DIA remain positive in index future, but remain overall negative in total derivative position. FII today turns positive into derivative segment, whereas the institutional investor would has turned negative, and they actually sold very heavily in the market. So, few factors what we are understanding probably because as we see today, CNX IT like IT index made a low of approximately 28,666. That's the low it made today and bounce back and close almost 0.4% in the negative. So it was a healthy bounce back in the IT index. But what exactly happened? It was the high on 10th of November and we had a gap up on 11th of November. What happened on 10th of November? Basically, inflation data from the US came and it came very, very positive for the market because it came lower than the expectation. So after that, we can see that how IT stocks got up and Nifty along with the IT stocks rallied. In terms of return, both IT index and Nifty has given a return of 2.7% from 10th of November, whereas the Bank Nifty has gained by 5%. So what exactly happening again, as we are understanding, market is not going anywhere on the closing basis, but volatility exists. Banks are, leading the gains, whereas IT is dragging the market. Now, tomorrow we have a inflation data coming from the US and day after tomorrow we have a Fed policy. Considering oil prices has crashed in the market, and if we have a better inflation number coming from the US, IT stocks could rally and market then again could find some support here. And Nifty may, because once it has made a bottom around it, like support around 18,350, and it has resumed the uptrend. So probably if 18,550 broken on the upside on the spot, 18,700 something in the future, then again it could resume upward. Again, like even if it move upward, 18,800, 900 could be the expected level on the upside, because banks has not seen any dip in the market. They will see dip in the market. Why I'm telling you? Today's India inflation data came in the evening. We were waiting for that data. It came at around 5.88% versus expectation of 6.27. Year on year basis, it has dipped by almost 80 basis points. So last year, at the same time, inflation number was say with 6.77%. Now it has come to 5.88%. Bonds is likely to, bond yield is likely to get in soften from here, because market now will expect that RBI will get hesitate to further hike its rate. And considering we are, little bit decoupling from the global inflation number, then RBI will look for this data very seriously. Industrial output has come in minus 4%, whereas the manufacturing output has come in minus 5.6%. So there is a strong, reversal in this output number, in this growth number, which RBI should look after it. If we talk about option data in the Nifty and Bank Nifty, Nifty PCR closed at 0.7% versus 0.5%. It is showing some kind of buying position build-up, whereas the maximum pain point remain at 18,500. Bank PCR from 0.9 to 1.12, it closed at 1.12. Slightly overbought, but maximum pain shifted from 43,500 to 43,600. So since the trend is upside on the Bank Nifty, so we could say that further upside cannot be ruled out. And as far as option data is concerned, in the Bank Nifty, 43,700 to 43,500, we have a strong put writer, which is showing the strength in the market and confidence in the put writer that it is expecting a market will sustain 43,500. Whereas if you talk about call writer has shifted aggressively towards 43,100 to 44,000 in the Bank Nifty. In the Nifty, the position does not change very much. And 18,500 to 18,400 put writer has highest position, whereas 18,600 shaded position. So somehow put writer is, closing their position. Whereas call letter also under 18,600 close some position approximately around 18%. So this is what we are understanding as far as the option data is concerned. Considering today's inflation data number, output number, and manufacturing output number, and how IT index has performed today, and somehow seeing some bottom support, we could expect that market again finding support around 18,500 on the upside and 18,800 on the upside as the intermediate resistance. That's it for now. We'll see more tomorrow. Also check our updated video on IOC stock price target, where we have did a little number crunching that OMC companies are doing quite well, and further upside we are expecting further upside on the stocks. Thank you for watching. Kindly subscribe our channel, like this video, and share to as many as people as you like. Thank you. Spread the word.